Good afternoon, everyone. My name is Prue Klein and I'm the Marketing Coordinator here at Wine Communicators of Australia. Today we'll be hearing from BDO Australia's Director of Business Services, Ryan Wilton, and Director of R&D and Grants, Melissa Fardone. Together, they'll provide a practical presentation about how your business can take advantage of the tax incentives and grants currently available. We have allowed plenty of time for any questions you may have to be answered at the end of the webinar. However, feel free to send them through as they come to mind. You can do this via the Q&A button at the bottom of your screen. As usual, this webinar will be recorded and a link to the recording will be sent to you should you wish to watch it again at a later stage. It is now my pleasure to hand over to Ryan Wilton.
Thanks, Prue. Hi, everyone. For those of you who aren't familiar with BDO, we're a professional services firm that provide audit, tax and advisory services to the private, public and not-for-profit sectors. I work within the business services space and predominantly with private businesses in the agri and wine sector. The first part of the presentation that I'm doing will be relatively quick and just running through some of the incentives that have been released around COVID-19 and stimulating the economy, as well as the recent federal budget. And then I'll hand over to Melissa, who will run through the R&D and incentives and grants. So the first thing I wanted to touch on was JobKeeper extension. So I'm sure you're all well aware of JobKeeper by now. However, it is continuing into the new year. So we have extension 2, which runs from January to March. The eligibility for that is that your December 2020 quarter is down 30 or more % on December 2019 quarter. So something to bear in mind because some people may not be eligible for the current extension 1 that runs through to December, but even if you're not eligible for that first extension, you could still be eligible for extension 2. So something to keep monitoring into the new year. In terms of payment rates, tier 1 is $1,000 a fortnight. Tier 2 is $650 a fortnight. The difference between those two tiers is just the number of hours. So tier 1, that higher rate, is 80 hours or more a fortnight for your eligible employee. Moving on to some of the federal budget announcements. There was a lot of announcements geared towards employment and stimulating employment in the economy. The first being the JobMaker hiring credit. This is really geared towards younger Australians. So from budget night on the 6th of October, if you create a new position, so you're increasing your head count, not replacing someone, but yeah, you do need an increase in numbers. You may be eligible for $200 a week for employees aged 16 to 29, or $100 a week for someone aged between 30 and 35. It does have an annual cap of $10,400. And the claims are in arrears from the 1st of February next year. So you can take on someone from budget night or the day after the 7th of October, but those credits will start getting paid from the 1st of February next year. Those employees must be working at least 20 hours per week in the given quarter. And also the other key requirement is they do need to be coming off some sort of unemployment benefit like job seeker, youth allowance or the parenting payment. So really young Australians that are currently unemployed and increasing your overall staff count. The other one around employment is apprenticeship and wage subsidy. So it's really a bit of an expansion of what was already in place, but eligible businesses can get reimbursed up to 50% of their cost, capped at $7,000 a quarter. Previously, these types of incentives were only allowed to small and medium-sized businesses, but the changes mean that all businesses, regardless of size, can be eligible for the reimbursement or the subsidy. It is capped at 100,000 places. So it is a first come, first served basis. So if it is something you're interested in, it would be worthwhile moving quickly on that one. Also much publicised is instant asset write-offs. So any business with an aggregated turnover of 5 billion or less, if you acquire an asset between budget night on the 6th of October and it's installed and ready to use by 30 June 2022, regardless of value, you can write that off from a tax point of view. Now, you do need to be careful. There are some exclusions around capital works, so building improvements and new structural assets aren't included, but otherwise depreciable assets are included. Second-hand assets is a common question. Do they have to be new? No, if your turnover is below 50 million, second-hand assets apply. If you're between 50 and 500, you are capped at 150,000 in value on the second-hand asset. And at the moment, it does end a year earlier on 30 June 2021, but they are continually revising and looking at extending those. A little bit more technical, but often small businesses, when it comes to depreciation, use pools, which means all your assets are in one category and get depreciated at the same rate, being 15% in year one and 30% thereafter. If your turnover is below $10 million, the value of that pool can also be written off. It's worth having a chat to your advisor about that one, because often we do see with new clients that there might be a pool existing on the balance sheet that can be written off. So there's a tax advantage sitting there. So it's worth keeping an eye on that. Last of the budget type announcements, loss carryback for companies. This is something we have seen before, but they've reintroduced. So right before the announcement, if you made a profit in, say, 2019 and paid some tax, and then you're completing this year's or last year's 2020 tax return and you've made a loss, there is an ability to claw back some of the tax you've paid in a prior year. So without these rules, that loss would just simply get carried forward. So there may be a benefit there. And this is going to be running between 2020 and 2022 financial years. Lastly, before I hand over to Melissa, just some other considerations. That these are nothing that has changed or that are new, but just some things to be thinking about from a planning perspective. Wet rebate, ensuring that you are maximising your claim there. Timing is another one that we do a bit of work around. So often something as simple as changing a BAS cycle from cash to accruals doesn't change your rebate, but it might bring forward and when that cash is actually in your pocket. So there's things to do around timing as well that could be helpful to you. Finance, obviously, with interest rates at record lows, if you haven't had a conversation with your bank recently, then it's certainly worth doing that as well to take advantage of any a drop in interest rates. And lastly, just appropriate inventory valuation. So obviously you never want to be in a situation where your inventory is worth less than your cost. But if that is the case, you can write that down. So it is worth at 30 June each year considering your inventory valuation and whether it's appropriate. We sometimes see situations where old stock is moved at heavily discounted prices, or even particularly relevant at the moment with Chinese exports and so on, that sometimes an export order may get stuck and have to get discounted as a result. So having a look at your inventory valuation is an important consideration as well. That's all from me in terms of just some quick updates and recent announcements. I'll hand over to Melissa now, who will run through R&D and other incentives and grants. Thank you.
Thanks, Ryan. So my name is Melissa. I head up the R&D and Grants division in BDO Adelaide. So a large part of what I do is helping companies access the R&D tax incentive, but then There's also a lot of different grant programs that are out there, some specific to the wine industry, some that are available across all industries, but wine's certainly still relevant. So I will start talking through the R&D tax incentive. I have found that it's a program where companies, especially smaller companies across the wine supply chain, might not necessarily be aware of, or might not realize that some of the activities that they're undertaking could get them this benefit, and then talk through some of the export grant opportunities that are available, again, wine specific and across all industry sectors, and finish up with some discussion around some of the other smaller grants that are available. And this is across federal government and state government. So as a starting point, the R&D tax incentive, it has been around for quite a long time. It's a federal government program administered by two different agencies. So you've got AusIndustry, which is an agency that checks your application to effectively say, okay, is this actually an R&D project? Are these R&D activities as defined by the legislation? We've then got the ATO. So once you've lodged your project descriptions with AusIndustry, you get an understanding of what activities you're claiming. You then work out, okay, how much did I spend on those activities? So your R&D expenditure goes into the company tax return, and then your benefit will be processed by the ATO through that tax return process. So the way it works is that you have 10 months after the end of the financial year to lodge your application with AusIndustry. Obviously, the earlier you lodge, the earlier you get the ball rolling, the earlier you can finalise your expenditure, lodge your tax return, get the benefit. And you can claim each year. So it depends how long your activities are ongoing for. So you could have lodgements in 20, 21, 22, leave it for a couple of years, pick it up again. You're not restricted in that manner. So that was just a high-level overview of the actual framework, and now I'll just talk you through what the actual benefit is. So the program is geared towards benefiting smaller companies. So if you have an aggregated turnover of less than $20 million, you then have access to what they call the 43.5% cash refund. So let's say you spend $100,000 on R&D activities in FY20, that then means you can access this $43,500 benefit. If you're paying tax, you can use that to offset your tax bill. If you are in losses, and if you have enough losses, you can cash that out. So when the ATO processes your tax return, they'll deposit that $43,500 in your nominated bank account. So that is a really powerful tool for a lot of smaller companies, and especially when it comes to making decisions around trying to innovate and being able to bring forward innovation. It's a really important tool. And it's still a really popular program with the larger end of town as well. So if your aggregated turnover is greater than 20 million, you then have access to the 38.5% offset. So you can't get the cash back that you can in the other tier, but you can still use that to offset any tax bills. You can carry it forward. So again, can make a big difference when it comes to timing of innovative projects that companies want to undertake. So now I'll talk a bit about who can access it and what is actually R&D. What types of things do you need to do to access the program? So this is one where you have to be a company. And what I will say about this one as well is it's not competitive. So it's not like a traditional grant where you put in an application and you might have a great application, but someone else might have a better one. And in that instance, you miss out on the money. So this one is nice in that it's self-assessment. It is, do you tick the boxes on eligibility? If yes, then you're entitled to receive this benefit. So that makes a bit of a difference. So you've got to be a company, and then the law says, okay, that description that you write for Oz Industry and you submit, it has to consist of core activities and supporting activities. And so your core activity is the experiment, and the supporting activity is the bits and pieces that you might do, or that you'll have to do before you can do the experiment. You'll have to do background research, you'll have to do planning, you'll have to design the test process, all of these things. So, okay, what is a core R&D activity? What, is this experimental process? So you have a core R&D activity. It's an experimental activity where the outcome is unknown. So you'll have a bunch of, technical issues that you're trying to solve. So what I've seen over the last nearly 10 years in the wine sector is you might be conducting R&D in relation to the packaging side of it. Let's say if you're exporting and your product is going to be exposed to extreme temperatures, perhaps, really hot, really cold, big shifts in humidity. These things all impact on the quality of the final product once it actually gets to the customer who consumes it. And maybe you're doing something innovative and new in regards to packaging to protect the product. So you have these technical issues, can I have a packaging that's going to withstand, going from 20% humidity to 100% humidity over X number of hours without, and X temperature ranges without impacting on certain aspects of the final product, whatever that might be. So you've got these technical issues, and you can't solve these technical issues on the basis of current publicly available knowledge. So you do this research, okay, has someone else solved this problem? Is this info publicly available? And if the answer is no, it's not publicly available, then you have to go through this experimental process to determine what the outcome is. Can you achieve those technical issues? So you're almost writing it like a science experiment back in high school or university. You start with your hypothesis, your experiment, your steps, what were the outcomes, and that you're generating new knowledge. So yes. So we've just had a question come through. Would changing wine varieties in a vineyard count as R&D? So the answer is maybe if you were trying to develop new wine varieties. So if you were taking, combining existing varieties in a certain way to achieve a certain outcome, and you can link it back to a scientific issue, a scientific process, then yes, that could be relevant. That could be R&D. If you know that, okay, this certain variety deals better with certain aspects of travel, but that's a known factor, then the answer would be no. So those are the sorts of areas where we would drill down into the detail and see where there might be a portion of experimentation. So as it says to the side there, if any aspect is not part of testing the hypothesis, then that's where the supporting activity comes into it. So a large part of supporting activities will be looking at what is the existing knowledge base that's out there. And you might have competitors that are trying to do similar things or have similar products, that doesn't matter, because we still come back to, is the information publicly available? Could you, within reason, just hire someone that would know how to achieve this outcome? At the end of the day, your competitors aren't going to give you their proprietary information. They're not going to tell you, yeah, this is how we solved this problem. So it's still information that's not available to you, and you have to go through that experimental process. Before actually I move on to the export market development grant, I will just say, as I said, there's a lot of aspects across the wine supply chain where you could have R&D. So I spoke about a couple of things in relation to packaging. You could be doing something different and innovative to the actual manufacturing process, making changes, making it more efficient, whatever it might be. And that question around different wine varieties or grape varieties, what you might be doing there. So you're not restricted to any one part of the process. You just have to go back to those first principles of, outcome unknown, etc. And that is where the starting point is. So, and as I said, it can be across the whole spectrum of the wine industry there. And I'll just quickly say, in terms of expenditure, so things that would be included in expenditure calculations are going to be salary and wages, contractor costs, portions of overheads. And the important thing with all aspects of the program is documentation. Have documentation to substantiate your expenditure and documentation to substantiate what you're saying about activities.
Melissa, before you move on to the next section, we've got a couple of questions that have come up for wanting a few more examples. Are you happy to answer them now?
Yeah, sure.
So one from Simon: what about upgrading the packaging of our wine for our wine club members to ensure boxes are better equipped for courier delivery?
If it was an instance where it depends what you mean by better equipped for courier delivery. If it was a matter of nicer labeling, sturdier boxes, so that they don't break, or boxes that have better handles maybe and are easier to carry, no. Again, you would have to link it back to some sort of scientific issue that is causing this technical unknown. So the answer is it depends.
Okay, we've got one more along similar lines. Does it include IT infrastructure? For example, if you need to redesign your wine club ecosystem, does this count? There are many types of IT systems out there, but we're doing a lot of research to get the right landing place, and that's coming from Hayley.
Software and IT related projects for R&D, we're seeing more and more of it, because I think of just the way the world's going, the current economic environment, the need to drive efficiency. Honestly, in the last 6 months, most of the claims that I'm seeing are IT related. So IT claims are a little bit trickier just because it is not this tangible thing, right? It's not like, here's my bottle of wine, here's my packaging, here are my grapes. You still need to go back to those basic principles. So if you are taking an off-the-shelf IT system and tweaking it a little bit here and there to make the interface nicer, things like that, I'd say no, that's not going to be relevant. But if you are doing things whereby you have to integrate different types of data sets, if you are developing software from the ground up, if you are taking off-the-shelf products and trying to get them to do things they weren't meant to do, then that's where you start to get into the right space and drill down into the detail.
Okay, I think we have one more question before you can move on.
Far away.
So Kerry's just asking, would a new branch to the business be an eligible activity, i.e. brewing, beer or spirit production?
No, so just adding let's say, you wanted to you wanted to build a brewery, or you were buying an existing brewery and adding it to the business. No, it would be within starting that brewery, are you doing something that's different? Again, I know it sounds like I'm repeating myself a bit, but you're doing something whereby there's this unknown. So I saw, this was a while ago, I reckon I saw it was a brewery that was looking at, trying to replicate casks, like cask wine, but for beer. So how do you have a bladder and, a system in the in the casking process so that the beer, stays as it's meant to be. So that's an example of something that I saw previously, or some companies might look at changing what the bottles are made of, and does that then create this unknown factor? So yeah, again, it depends. Are you doing something innovative, or are you just putting in a stock standard brewing line, things like that? But that is where there might be other grants. If it's not covered by the R&D tax incentive, there might be other like grant programs, other bits and pieces that could be relevant, which we'll talk a little bit about towards the end. Any more questions? No, we'll move along. The Export Market Development Grant. So this is another entitlement program. It's a federal program. It's from Austrade. Again, you can claim, well, not every year forever, but you have up to 8 grants that you can access. And it exists to help SMEs hit their targets when it comes to, trying to break into overseas markets, right? So it's a 50% grant. It is retrospective as well. So whilst the R&D is retrospective, the EMDG program is retrospective as well. So after the end of each financial year, you put in an application online and you get payments to reimburse you. So you've got to have at least 5K of spend. You've got to have above 5K of spend and at least 15K. And the maximum grant you can have is $150,000 per year. So as I said, you can claim every year. You can claim every year up to 8 years. And that doesn't have to be one after the other. It's quite common where people might claim for a couple of years, they might leave it, they might jump back in for a couple of years, just depends on what activities you are undertaking. So this one is much more generous in terms of types of companies or types of entities that can access the program. So you can be a company, a partnership, individual, a trust, etc., etc. Current rules of the program are income of not more than 50 mil in the grant year. And you have to be, they use the term principal status for the export business. So the entity applying has to be the entity that is responsible for the export. You have the IP that might be sitting around that. And so obviously in the wine industry, you're going to be promoting, for the most part, the export of the actual wine products. There are other things that companies claim for, so it can be goods or services, and certainly there are IT related claims for this program, inbound tourism, IP, conferences and events. So it's quite broad, and has been a very popular program, been around for a very long time, and the government's just, because of COVID really, has tipped in some extra money into this fund, which is good.
One quick question from Simon. Is there a reason why it's only available for 8 years?
I think the practical reason is by that point, they expect that, okay, you've got a grip on these markets, that new markets that you're trying to enter, new products that you're trying to establish, that you should have established yourself. And at that point, the government probably, thinks, okay, we've provided an adequate level of assistance for this particular market, for this particular product. And also it would just be a function of the budget and money. So what we've seen in recent years with this program is, because it's been super popular and the bucket of money was dwindling a bit, so you might be technically eligible to receive $150,000 in any year, but because there's not enough money, maybe you only get 100K. So they make sure everyone gets something, but that might not actually represent the maximum amount that you should be eligible to receive. So yeah, it's been a bit of a balancing act with this one. But like I said, they have tipped in a bit of extra money, and they have for FY20 claims, I believe they've said because of COVID, they will pay out as close as they can to 100% of what people are eligible for. So that's been really good. So I believe those applications for the FY20 year are due online by 30th of November. And this is more of an administrative style program. You're inputting data online about, here's my business, here are my financials, here's the list of my transactions that are relevant, the proof of payment, supporting documentation. So there are 8 categories of expenditure, which are on the screen there. So, you know, have you hired a marketing consultant to go and spend time in overseas markets and try and, you know, develop new markets for you, or new products into certain markets? Are you yourself doing marketing visits? Are you giving away free samples? Are you going to trade fairs? Advertising is, you know, a very common one. Are you paying, and even, you know, just paying for Google ads for that are targeted towards specific overseas markets? Do you have an overseas buyer that you're engaging with to try and push into certain markets? So it all goes into an online system, and then you receive payment in two chunks, basically, depending on how much you are eligible to receive. You might get it all in one chunk. If you have a lot of eligible expenditure, you might get it in 2 chunks. So I might leave it there on EMDG. The wine export grant. So this is a popular one amongst the wine industry. It's very much like the EMDG. You're going to get you can get more money out of the EMDG, which is up to 150K. This one is 25K, but maybe for whatever reason you don't have heaps of expenditure. You might prefer to go for this one because it, you know, might be less of an administrative burden. It might be a bit easier, but same principles. It's there to help reduce the, you know, costs of securing new distribution channels. Part of the government's 50 mil export and regional wine support package. So again, 50K of eligible expenses plus this daily allowance, and again, a reimbursement for costs that you've already incurred. So I think there's not an announcement quite yet on the next round. Oh, no, sorry. I was jumping ahead of myself. This one is open on an ongoing basis until 21st of May, 2021, or until the funds are exhausted. So I think the reality is it's a popular one. And again, because it's retrospective, even though, say, at the moment, there might be, you know, people might be more uncertain about what export looks like going forward. This is retrospective. So looking at activities that you've already undertaken, I would encourage people, if you are looking to apply for this, do it sooner rather than later, because there's every chance that that money will dry up before next May. And in terms of some eligibility aspects, turnover less than 20 mil, export turnover of less than 5 mil, and you're looking at the financial year immediately preceding your application. And again, promoting your Australian wine product. So look at what are those promotional activities. Depending on how much you've spent, what you've done, maybe it makes more sense to apply to the wine export grant. If you've spent a bit more, maybe it makes more sense to look at EMDG. So there are other bits and pieces to consider. So what I've spoken about, the focus has been on federal government grants. There are some state government grants that are available. So the two rural finance ones on the screen there, so that's in relation to the Victorian state government. And we've got the ACT one there. So obviously got the two there around the smoke taint. So those are up to 10K each. They're simpler grants, and it's all about damage that was done to vineyards in the recent bushfires. So, as I said, 10K, they're going to be easier to access than some of the larger funds. And that first one there, the wine grape testing rebate, that's where if you're concerned that maybe the bushfires, the smoke, whatever it might be, has impacted on the taste of your product, you can, I think, get it's $1,200 for testing to be run on a taste level. The last one I've got there is the Manufacturing Modernisation Fund. Now, this is not open yet. This came out from the last budget announcements. One of the major initiatives from government was bolstering the manufacturing sector. So there, I think it was last year, there was a round one of the Manufacturing Modernisation Fund, and in the budget they released funding for a round two, which is meant to open prior to Christmas. We're approaching mid-November, so this might be one of those ones where there's a short window to apply, but yeah, so keep an eye out. But so we don't have heaps of information at the moment on what this fund will look like, but it'll be relevant, unless there are some strange rules, it'll be relevant to the actual wine producing process. Once you've gotten the grapes, you're actually making the product. The last round was all about, are you doing something innovative? Are you creating jobs in your sector? So, and I believe there are a couple of different tiers for different size companies, SMEs and then larger companies. But yeah, it was quite a lot of money available in terms of the individual grants. It was very popular. So I'd say you'd want to have a very strong project to put in an application, but yeah, that's one to keep on the radar going forward. So that is it for the formal part of it. And now I think we're going to throw it to some Q&A.
Yes, great. Thank you, Melissa. And I know we answered a few questions along the way there, just because they were quite relevant to what you were talking about. So I hope that was okay. I'll give everybody a chance to type in any extra questions they have. It's a lot of fantastic information that you've provided. One question I had was, like, moving forward, how do wine businesses kind of keep track of all these opportunities in this space that are available? Is there some good website references? What do you suggest?
Yeah, so there are a couple of websites that I would recommend signing up for their mailing lists. So that's business.gov.au, and if you Google Grant Connect, between those two websites, I've personally found them to be the most reliable, because it is really hard, and especially at the moment because of the bushfires, because of COVID, there has been a lot of funds being released, and I think over the next 6 to 12 months we'll see a fair bit being released. So put yourself on those mailing lists, and or reach out to your advisor. Feel free to reach out to myself and Ryan, because there is a lot out there and it's easy to miss out on, and which agency is doing it. Is it state? Is it federal? Can you apply for different things at the same time? It gets a bit messy. And with the budget announcements, like they've put announcements out, but details aren't available. So it can be a bit of a waiting game.
Yeah, great. Look, I think we might have exhausted all the questions earlier. Everyone jumped in. But if anyone has any final questions, please do ask them. Otherwise, we might wrap up.
Sounds good.
Yeah, excellent. So thank you again, Ryan and Melissa, for your presentation today. And thank you so much for everybody who attended. Today was the final WCA webinar for the year. We'll kick off the 2021 webinar series on the 9th of February, and more information about the program will be sent out early in the new year. For WCA members, all recordings from previous webinars are held on our website in the members section, and all Wine Australia sponsored webinar recordings available directly on the WCA YouTube channel for everybody. Please go to our website to find these recordings. If you have any suggestions on webinar topics you'd like us to cover in next year's program, please don't hesitate to send me an email. It's wca@winecommunicators.com.au. And finally, thank you again for joining us today and for your support of program throughout the year. Wishing you all a safe and happy festive season, and we look forward to seeing you all back online for what I hope is a better year for all in 2021. Thank you.